This video has been brought to you by the Committee on Public and Government Financial Management on the overview of government accounting. The expenditure done by the government in India is huge. For any part of the government using taxpayers' money, availability of accounts, including audited accounts, in the public domain on a timely basis is a primary requirement for good governance. Therefore, several initiatives are being taken in India to strengthen and encourage timely financial reporting, public financial management, and auditing system in government to ensure greater accountability and enhance transparency. In India, there are three levels of government: central, state, and local self-government. The local self-government, also known as local bodies, is at the third tier of the government in India and is further classified into two categories. First, rural local bodies or panchayats consisting of Zilla Panchayat, Block Panchayat, and village or Gram Panchayat, and urban local bodies consisting of municipal corporations, municipal council and municipalities, etc. Let us now look at some of the constitutional provisions. Article 150 of the Constitution of India prescribes the form of accounts of Union and of states. This article mandates that the accounts of the Union and state governments shall be kept in such form as the President may, on the advice of the Comptroller and Auditor General, that is CNAG of India, prescribe. This function is exercised by the Comptroller General of Accounts CGA, Ministry of Finance, Department of Expenditure, on behalf of the President of India. CGA is the principal accounting advisor to the Government of India and is responsible for prescribing the form of accounts of the Union and states, and to frame or revise rules and manuals relating thereto on behalf of the President of India, and also prepares and submits the accounts to the government. Article 151 deals with audit reports. CNAG of India is empowered to audit all receipts and expenditures of Government of India and of state governments, including those of autonomous bodies and corporations substantially financed by the government. The accounts of the government are prepared by the CGA and certified by the CNAG of India, then submitted to the President of India and tabled in both the Houses of Parliament. Let's now have a look at government accounting. Government accounting is the process of collecting, classifying, recording, summarizing, and interpreting all the financial transactions, including revenues and expenditures of all the government offices. It keeps a record of public funds. The purpose of preparation of government accounts is to capture and record financial transactions and compile them into some meaningful statement or report as per prescribed accounting codes, rules, or standards. The objective of the government accounting is to provide information about the financial position and financial performance of the government, that is, income, expenditure, or deposits and loans, or reserves, or cash balances, etc. Government accounts maintain the transactions of generation and collection of revenues. It also records all the expenditures incurred on various heads. Further, it provides information about the loan advanced by the government to others and the repayment of deposits. It also provides information about the present and the future cash availability. Now, let's have a look at the classification of government accounts. The government fund is classified into three parts: consolidated fund, public account, and contingency fund. And government accounts record all the transactions pertaining to these three funds. The Consolidated Fund of India or of the state, established under Article 266(1) of the Indian Constitution, includes all revenues received by the Government of India or any state from tax and non-tax sources, all loans raised by the issue of treasury bills, loans or ways and means, advances, and all monies received by the government in repayment of loans. No monies out of any consolidated fund shall be appropriated except with legislative approval, that is, from the budget. The Public Account of India or of the state, established under Article 266(2) of the Indian Constitution, includes all other public monies received by or on behalf of the Government of India or of a state, such as debts, reserve funds, deposits, advances, suspense, remittance, and cash balance. No approval has been prescribed for withdrawing any money from the public account. The Contingency Fund of India or of the state is in the nature of imprest account established under Article 267 of the Indian Constitution. It authorizes the Parliament to establish a contingency fund of India for disasters and related unforeseen expenditures without prior legislative approval. The approval of the Parliament of India for such expenditures and for withdrawals of an equivalent amount from the consolidated fund is subsequently obtained to ensure that the corpus of the contingency fund remain intact. Now, let's have a look at the basis for preparation of government accounts. The government accounting system in India is rule-based and primarily follows cash basis of accounting, whereby the transactions are recorded on actual cash receipts and disbursements during a financial year as distinguished from amounts due to or by the government during the same period. The preparation of accounts of the central and state government is guided by Government Accounting Rules 1990, General Financial Rules 2017 as amended up to 2022, Central Government Account Receipts and Payments Rules 2022, Civil Accounts Manual, and List of Major and Minor Heads of Accounts. However, a few government departments and urban local bodies have adopted accounting reforms and started groundwork to simultaneously prepare financial statements on accrual basis of accounting. Regarding the local self-government, the National Municipal Accounts Manual or NMAM formulated by the Ministry of Housing and Urban Affairs based on the task force report of the CNAG is prevailing accounting framework for urban local bodies. NMAM provides an accrual-based guidance to ULBs. Cash-based accounting system is followed in rural local bodies or RLBs or panchayats. Their accounting is done through PriyaSoft that is embedded in eGram Swaraj. Now, let's have a look at the accounting standards for government. The Government Accounting Standards Advisory Board (GASAB), constituted by the Comptroller and Auditor General of India (CNAG), is mandated to formulate accounting standards for central and state governments, including union territories with state legislature, to facilitate reforms in government accounting. The GASAB formulates cash-based Indian government accounting standards to improve existing cash-based accounting system, which is the current focus of the government. The GASAB is also formulating accrual-based Indian government financial reporting standards (IGFRS) to conduct pilot studies on accrual accounting. The GASAB's accounting standards, as notified by the Government of India, as informed earlier, are applicable to the central and state governments and union territories with state legislatures. As of now, many of these standards are yet to be notified and hence not mandatory. ICAI is formulating accounting standards for local bodies, that is, ASLBs. ASLBs are based on International Public Sector Accounting Standards (IPSAS) that are internationally recognized accounting standards for all levels of government. While formulating ASLBs, modifications to IPSAS are made considering the peculiarities of local bodies in India. Till date, 31 ASLBs have been issued by ICAI, including one cash-based ASLB to facilitate transition from cash to accrual-based accounting system. ASLBs are recommendatory in nature and will become mandatory from the date specified in this regard by the state government concerned. Uttarakhand has included ASLBs in its State Municipal Accounts Manual, and therefore ASLBs are now mandatory to be followed by ULBs of Uttarakhand. Also, the Council of ICAI has mandated ASLB2 cash flow statements and ASLB5 borrowing cost, which are conceptually similar to NMAM for members of ICAI to comply with while auditing the financial statements of urban local bodies with effect from 1st April 2022, along with the guidance note on accounting for investments for local bodies. Internationally, governments used IPSAS, that is International Public Sector Accounting Standards. IPSAS are internationally applicable accounting standards for all levels of government, excluding government business enterprises. IPSAS are accrual-based. One cash-basis IPSAS is also there that prescribes the accounting guidance to facilitate transition from cash to accrual accounting system. The non-mandatory portion of the cash-basis IPSAS identifies additional accounting policies and disclosures that an entity is encouraged to adopt to enhance its financial accountability and transparency of its financial statements. Apart from this, accounting standards as applicable to commercial entities are applicable to public sector undertakings (PSUs) in India, like IFRS or the like are applicable to the government business entities across the world. Next, we have the Public Financial Management System or PFMS. PFMS is a web-based online software application developed and implemented by the Office of the Comptroller General of Accounts (CGA), Department of Expenditure, Ministry of Finance, Government of India. It is used for sanction preparation, bill processing, payment, receipt management, fund flow management, and financial reporting. It tracks funds released under all plan schemes of the Government of India and real-time reporting of expenditures at all levels of the program implementation. Through PFMS, direct payments to the beneficiaries are also made. The outputs or deliverables for the various modes or functions of PFMS include but are not limited to payment and exchequer control, accounting of receipt, tax and non-tax, compilation of accounts and preparation of fiscal reports, integration with financial management systems of states. PFMS provides various stakeholders with a real-time, reliable and meaningful management information system and an effective decision support system as a part of the Digital India initiative of the Government of India by establishing an efficient fund flow system as well as payment-cum-accounting network. Finally, let's look at auditing in government. The government deals with public funds and resources. Purpose of audit in government is to ensure that the resources and funds are utilized efficiently and effectively. Audit may be classified as internal audit, external audit, special audit, social audit, and propriety audit. Internal audit helps the government in establishment of a strong internal control mechanism and enhance transparency and accountability in operations of the government. External audit determines whether the financial statements present true and fair view of the operations and financial affairs of the entity. Special audit means an audit of particular expenditure or receipt or sanction or contracts or other decisions having financial implications that ensure effective and efficient utilization of public funds. Social audit ensures public accountability and implementation of projects, laws, and policies to increase efficacy and effectiveness and ensure transparency in government activities. Propriety audit brings to light cases of improper expenditure or waste of public money. One of the foremost features of C&AG audit is the consideration of propriety in the decision making, which sets these audits on a different pedestal. Audit in government is done by C&AG for central government, Accountant General for state governments, and professionals, that is CAs. State local fund auditors also do the audit in case of local bodies. In the absence of local fund auditors, state government may get the audit done by Accountant General. Audit Online is one of the generic and open source applications developed as a part of Panchayat Enterprise Suite under ePanchayat Mission Mode project initiated by the Ministry of Panchayati Raj (MOPR). Audit Online facilitates the financial audit of accounts at all the three levels of panchayats, viz. District, block and village panchayats, urban local bodies and line department by auditors, state AG or LFA. It also facilitates recording details for both internal and external audit as per defined process. Audit Online also facilitates the online and offline audit of accounts and also serves the purpose of maintaining the past audit records of the auditee with the associated list of the auditors and audit team involved in the audit. And it also acts as a good financial audit tool and improves transparency and accountability. Also, the information is available in the public domain for usage by other applications of Panchayat Enterprise Suite. This brings us to the end of the video. Thank you.